Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hello, welcome back to the Investing Podcast. My name is Veresen Denied. This is Tusk Media, and today we would like to talk about Veresen, and specifically what happened with respect to last week, Friday evening, and the events that unfolded and will continue to unfold over the next several months and potentially even years with respect to the Jordan Cove project in Coos Bay, Oregon. So I actually have a bit of familiarity with this because I used to live in Oregon, but I want to first step back and explain a little bit about the background of of the whole proceeding. So Veresen is a pipeline company. They're an old, boring pipeline company. They have a big pipeline. We talked about it, so you can check our archives for content. But they have a big pipeline, which is their money printer that runs from the shale plays in Alberta, in the Montney, down to Chicago, where it's processed and fractionated, and then sold on. And that's historically been where they make all their money. And what they wanted to do was, being a West Coast midstream provider, was they wanted to get on the LNG train. Right now, all the LNG projects primarily are located in Texas and the Gulf Coast. But with a lot of the exports wanting to go to Asia, Japan and China, they wanted to put a facility on the West Coast so you don't have to go through the Panama Canal. You can go directly just straight across the Pacific Ocean, save money on transportation, save time, and get the gas out there, because gas in Asia trades at a substantial premium to gas in the United States. The best way to do that is liquefying the natural gas, because in liquid form it takes up a substantially less amount of room relative to, obviously, the gas that's in the air right now. Methane in liquefied form is much more concentrated. So Veresen has gone through all this process over a number of years, trying to get the approval so that it can start construction on this project, build it, and then they'll take a tolling arrangement. They're not going to take the margin on when the gas is sold on, but they want just to continue to churn out. It's like if you go on a toll road, they'll take an 8% toll for you, essentially. So that's what Veresen is trying to do. And in order to do that, they obviously need to get the approvals for the facility itself, which is going to be located in Coos Bay, Oregon, and they also need a pipeline so they can source the gas, because if their facility is there but they can't source the gas, then it's pointless. So the big hurdle that everyone has been talking about was the Department of Energy approval. And for that, you need the benefits of exporting the commodity to outweigh the potential harm of that. And the Department of Energy ruled, and this was actually a surprising ruling, because people thought that Department of Energy under an Obama administration would be more likely to be cognizant of the environmental interests and weigh those more highly, and the potential negative externalities of that, they'd weigh highly against Veresen. But in this case, Department of Energy actually approved it, so then it went to FERC, which is the Federal Energy Regulatory Authority. Now, FERC, its mission, you kind of wonder why they actually even have a role in this process, because their mission is to, quote, assist consumers in obtaining reliable, efficient, and sustainable energy services at a reasonable cost through appropriate regulatory and market means. So think about that and you think, well, that probably means regulating utilities, not opining on whether or not you should export natural gas. Nevertheless, FERC must approve this. They were actually given the authority by the DOE to look at these issues under the purview of its mission that I just explained, and render its opinion on whether or not the project can go forward. Well, so if you want to build this project, you need the facility and you need the pipeline. So the facility would not happen without the pipeline, obviously. So first thing that FERC looked at was the pipeline itself and whether the economic benefits would outweigh the economic harm of the pipeline. And what they said was that when just looking at the pipeline, they cannot establish an economic need for the pipeline. Of course, they are looking at it independently of the Jordan Cove. You would never build a pipeline if you didn't have an export facility. So, but the way in which FERC looked at it, they said, you know, we just want to examine the economic need for the pipeline. So they made a ruling in March, and they rejected it on those grounds. So Veresen said, okay, well, we just had established need for Jordan Cove from the DOE, and we thought that that should have implied a need for a pipeline. However, you know what we're going to do? We're actually going to go and get precedent agreements, people committing to purchase space on the pipeline in order to, you know, demonstrate need. So what they did in the space of a couple months, they identified parties, and now they're 77% subscribed. So they said, okay, well, FERC, here you go. We have these parties who are willing to subscribe at 77%, and we expect more of that will come in the future. So we have now established economic need. That's Veresen's argument. Well, FERC gets this and deliberates, and deliberates and deliberates and deliberates. And they start deliberations in April, and they concluded deliberations on Friday. And their view was that they are not going to rehear the case. Not even that they're not going to approve it, they're just not even going to rehear it. They're not going to call in other arguments. So this was definitely a decision made by FERC for, you know, that they said, you know, that we're not going to get any benefit from actually rehearing this case. Now, to FERC's defense, what they used was the following argument. They said that the only times that they can rehear a case is when the following is true. Quote, in order to persuade the Commission to exercise its discretion to reopen the record, the requesting party, in this case Veresen, must demonstrate the existence of extraordinary circumstances. The Commission has held that the requesting party must demonstrate a change in circumstances that is more than just material. It must be a change in core circumstances that goes to the very heart of the case. This policy against reopening the record except in extraordinary circumstances is based on the need for finality in the administrative process. And they continue to go on and they say, applicants have failed to demonstrate the existence of extraordinary circumstances. While it may be a material development, it is not an extraordinary development, and therefore FERC is not going to rehear the case. So, and therefore, because they're not going to rehear the pipeline case, they're not even going to talk about the Jordan Cove potential. Now, taking a step back from all this, to the untrained eye, which would be me, I see the economic need. I lived in Oregon. I saw what Coos Bay was. I see what Coos Bay is now, which was where the terminal would be. And the economic benefit is readily apparent to me. These people need jobs there, and they're not getting them. The state of Wyoming was actually sided with Veresen in this case. So Veresen and the state of Wyoming were both appealed it to FERC, and FERC ruled the way it did. So what is FERC? It's this organization that's designed for almost consumer protection. There are 3 members on it. 3. Not even, the Supreme Court has 9. There are 3 members, well 8 actually right now, but the 3 members on FERC. That's incredible that they can make a decision of this magnitude. They're unelected, appointed by the executive branch, confirmed by the Senate. And you know, there's a lawyer. The chairman is a lawyer. The Cheryl LaFleur, she actually worked at Exelon, which was a utility, which is one of the largest utilities. and there is Colette Honorable, who worked at a regulatory authority for utilities. What's really interesting when you look at these is that they have not had a great record about actually bringing down costs for the consumer as part of their electric bill. If you look, there's been persistent inflation despite the declines in the price of coal and declines in natural gas. So it seems like they might be, and this is just my view, they might be neglecting some of their core responsibilities, namely monitoring utilities, at the expense while they go forward and spend 7 months rejecting a pipeline proposal. It's a 36-inch pipeline. It's about this big, and it's going to go for 150 miles, and it's forestalling a $4 billion project. It's incredible to me. It'll be interesting to see what happens. For Veresen's part, they said that they will reevaluate, and at an appropriate time they'll give an update. They still think that the project is compelling, but they need to evaluate whether or not they need to resubmit entirely, or whether they'll be able to request another rehearing under a new administration. That's an update on Veresen. We are long the shares. They were sold off quite a bit on Friday, rebounded a little bit yesterday, not very much, and we're going to continue to watch the stock very closely in the coming days and weeks. Thank you.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.